Hey guys, hope you're doing well out there. Today, bringing you a slightly different video, taking a look at an industry roundup, that being the cybersecurity space. We'll take a look at the four most dominant names in this space, discuss their future earnings projections, and take a look at some valuation metrics in order to determine the fair price for each of these companies and see whether they are a buy, sell, or hold at today's prices. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to 500 subscribers and it would mean a lot. Also, let me know in the comment section below if you would like to see more of these industry roundups. We can certainly take a look at the semiconductor space, the EV space, and others. With that being said, let's jump right into it. Now, before I go into the numbers for each of these companies, I want to take a look at exactly what I do when I come across a new industry or a new company within an industry I haven't looked at previously. What I like to do is take a look at the company and compare it not only to itself historically, but also its peers within that industry. And so the companies we're taking a look at today are Zscaler, Crowdstrike, Palo Alto Networks, and Fortinet. And what I want to do is see how they trade amongst each other. And so now I have the price to sales for each of these companies pulled up. And on a traditional basis, certainly all of them would be wildly overvalued. However, within this industry and compared against each other, they are certainly not overvalued, as this industry demands a premium by the market. And you can see almost all of these companies trading at a price to sales north of 10 times. You see out of these, Zscaler and CrowdStrike are the most premium names, as they have a bit higher growth and so demand a higher multiple. You see Fortinet and Palo Alto Network trading closer to 10 times price to sales. And certainly you see anytime a company like Zscaler comes down in that range of 8 to 9 times on a price to sales basis, it certainly can be said to be undervalued compared to its peers and to itself historically. And so what I like to do when I come across a new industry is just see how these companies trade within that space and what sort of multiple do they demand. And you can see right away the cybersecurity space certainly trades rich compared to the other industries within the S&P 500. Moving on to our fair value calculator, we'll start off with taking a look at Zscaler. So on this middle column, I have the historic 5-year compounded annual growth rate. So you see for Zscaler, their revenues over the last 5 years have been compounding at roughly 50%, close to 54%. So very phenomenal growth. This is a high growth company, a relatively young company compared to its peers. And so that's why you see that high growth number. You see this earnings, it doesn't have a 5-year CAGR. That's because Zscaler has not been profitable for 5 years. If we come over to Seeking Alpha, we can see Zscaler, you see they weren't profitable back in 2018. And so over the last 5 years, they haven't reported profitability each year. However, the years they have reported profitability, that has been growing steadily. From July 2019, they reported roughly 22 cents of EPS to now July of 2022, they reported roughly 69 cents of EPS. And so steadily growing on that bottom line. The 2024 EPS column represents analyst projections for this upcoming fiscal 2024. Outside of Fortinet, all of these companies have finished their fiscal year 2023, and so this middle column represents the next 4 quarters of outlook based on analyst projections. And so Zscaler expected to post an EPS number close to $2.11. That would represent a net income value of $307 million of net income. Now, the 5-year CAGR based on analyst expectations is close to that 25%. And so this is where you as an investor get to pick your valuation metrics and form your projections based on what you think Zscaler or any company would be growing at. And so I have taken a 5-year CAGR of 25%, applying a 30 times multiple on that. Certainly companies in this space trade very rich. And so even right now you see Zscaler trading at a forward price to earnings close to 96, which is just absolutely mind-boggling. But on a 5-year basis, I've given Zscaler a price to earnings of close to 30 times based on 146 million shares outstanding and a 2% dilution rate. So we know Zscaler has been diluting shares. I have gone with the assumption that they'll be diluting at 2% every year for the next 5 years, giving a discount rate of 12%, as that's what we want the stock to return annually over the next 5 years, and applying a 10% margin of safety we come to a fair value of close to $90 for Zscaler. Now currently this is trading at close to $160, and so it certainly needs to be cut in close to half in order to come down to my fair value. Now, my fair values are based on more conservative numbers. I tend to be more conservative in my projections, as I think it's better to be conservative and right than to be aggressive and wrong. And so certainly if you think $90 for Zscaler is wildly undervalued, your projections for the 5-year CAGR or your price to earnings are probably higher. However, I tend to go with lower estimates and try to let the price come to me rather than chasing it. And so $90 is my fair value for Zscaler. Moving on to Crowdstrike, ticker symbol CRWD, they are trading at roughly $165 per share, a much more explosive growth of a company. This one's 5-year revenue CAGR has been close to 84%. And so certainly if we go over to Crowdstrike and take a look at its revenues, those have been growing very steadily, up from roughly $250 million back in January 2019, all the way up to $2.2 billion in January of 2023. So very strong growth on that top line. You see even on a bottom line basis, it has very strong growth. They are also, however, not profitable over the last 5 years. As you see, they turned a net loss in 2020. And so that's why you see on an earnings basis, it doesn't have a historic 5-year CAGR. In 2024, Crowdstrike is expected to post EPS numbers close to $2.83. That would represent a net income of close to $675 million. Similar to Zscaler, I see this one growing at a 5-year CAGR of roughly 25%. You come down to analyst expectations. Over the next few years, they're expecting 21% growth in 2025 and 24% growth in 2026. And so I took that 25% CAGR on that bottom line, applying a 30 times price to earnings multiple and assuming 2% share dilution. Similar to Zscaler, Crowdstrike has also been diluting shares at roughly faster than 2%, but I'm assuming 2% over the next 5 years. Applying a 12% discount rate and a 10% margin of safety, we come to a fair value for Crowdstrike close to $120 per share. Right now this is at $165, so again overvalued in my opinion at the current time. However, when we get to the technicals, we can take a look whether this has a level of support at this $120 level or not. Moving on to Palo Alto Networks. Now this is the industry leader in this company, as they have close to an $80 billion market cap, as we see close to $75 billion in market cap. Now being that big, they are certainly growing at a slower pace compared to these other companies, and so you see 5-year revenue CAGR for Palo Alto Networks coming in at 25%. Now over the past 5 years, they have also not been profitable, and so they don't have a 5-year CAGR. However, in 2024, their EPS is expected to be in the range of $5.33. That would be a net income number of close to $1.64 billion. Now, since they are not growing as fast on that top line, I also applied a 20% growth on that bottom line. We see coming down to analyst expectations. Analysts are expecting them to grow roughly in that 20 to 23% range over the next 3 years. And so applying a 20% growth on that bottom line and a slightly lower PE of 25, while keeping the other metrics such as share dilution, discount rate, and margin of safety the same, we come to a fair value for Palo Alto Networks close to $153 per share. Again, trading higher than my fair value for Palo Alto based on the projections I'm running. Lastly, taking a look at Fortinet. Now this is a company that is also experiencing slower growth compared to the others. However, it's the only company out of these 4 that has been consistently profitable over the past few years. As you see, Fortinet's past 5 years, even in December of 2018, they were profitable, posting an EPS of 37 cents all the way up to $1.19 of EPS they posted in December of 2022. And so their revenue on a 5-year basis has been compounding at roughly 24%. And although their earnings, you see, over the last 5 years have been compounding at roughly 120%, certainly over the next 5 years, they likely won't be compounding at this pace. And so analysts are projecting an EPS number of close to $1.75 for 2024. That would represent, let's see, roughly 16% growth on that 2024 EPS number. Over the next 3 years, they're expecting roughly 20 to 25% growth on that EPS line for Fortinet. And so I took a 20% growth rate on that bottom line, applying a 25 times price to earnings multiple, similar to Palo Alto Networks. Now, the other interesting thing with Fortinet is they're the only company consistently buying back shares as compared to the others that are diluting shareholders. And so over the next 5 years, I see Fortinet buying back roughly 2% of the outstanding shares each year. Applying a 12% discount rate and 10% margin of safety, we get to a fair value for Fortinet at roughly $61.5. And so this is the only one that's trading very close to my fair value, and we can see how far off it is exactly, as each of these need to come down to my fair value. However, Fortinet is roughly in line. As you see, it only needs to come down roughly 0.5% in order to come down to my fair value, as compared to the other three, which need to see big slides in their stock price in order to come down to what I think is a fair value for them. Taking a look at the technical chart for Zscaler, this one is trading close to $170 in the after hours, and so it would need to see a sell-off close to 46% in order to come down to my fair value of $90 per share. Now, when I say a fair value of $90 per share, now that's not exactly saying that Zscaler has to come down to $90 and then I think it's a screaming buy. I think that's when it would become more attractive on a risk reward basis, and so that's where I would consider taking a look at Zscaler. And certainly always do your own due diligence and run your own projections when investing in the market. Now, my $90 fair value also lines up with a long-term resistance back in July 2019 and a more recent support back in April of 2023. And so certainly it's not out of the question for Zscaler to come back and test these levels, or at least consolidate in this range and come closer to this $100 level. Moving on to Crowdstrike, this has a similar chart pattern to Zscaler. As you see, back in November of 2021, it made its all-time highs and then came crashing down in order to bottom at the start of this year, from which it's seen a nice rally of up to roughly 70% over the past year to date. Now, my fair value for Crowdstrike is closer to $120 per share based on those projections, and so it would need to see a sell-off of close to 27% in order to come closer to my fair value. Now, there is a level of support before that at close to $145 per share. In the near term, Crowdstrike is also making a series of higher highs and higher lows, as you can see. And so certainly while it's locked in this uptrend, it does have room to continue to move higher. However, I wouldn't come in here and chase the stock, as I personally think it's still a bit overvalued in my opinion, and I would like to see it come down to my fair value of closer to $120 per share. Moving on to Palo Alto Networks, this one is trading roughly at $245 per share. Now, this has a slightly different technical pattern compared to Crowdstrike and Zscaler. As you see, Palo Alto didn't see nearly the sell-off that the other two did back in 2022 and has rallied very hard since then, as it's up nearly 80% from its lows at the start of this year. Now, my fair value for Palo Alto Networks sits closer to $153 per share. Certainly there's a lot of support it can see before that, closer to $190 per share, even at $175 per share. I would wait for Palo Alto to come down in this range of close to $180 to $150 per share, where it likes to consolidate, and once it comes in that region, reassess the risk reward for the stock and see if it would be a buy at that point. Lastly, moving on to Fortinet. Now, this is the one that's the most interesting in my opinion out of these four, as it's trading the closest to my fair value, currently at $62 per share. My fair value was closer to $61.50, and so certainly this is in line with my fair value. And you can even see that it was trading closer to $80 per share before seeing a massive sell-off of closer to 27%. I believe after they reported earnings, they cut their forward-looking guidance, and that's what caused this big sell-off. However, it is at a key technical level right now, as I think it has the ability to rally and fill in this gap of roughly 20%. And so although Fortinet does look ugly in the very near term, I think it has the best risk reward out of these four, in my opinion, as relatively speaking, it is trading more in line with its valuation and has the ability to rally along with the other stocks within this industry. Now, one thing I want to talk about for investors that are looking to get exposure to this cybersecurity space is to take a look at the First Trust Cybersecurity ETF, ticker symbol CIBR. Now, an ETF is a great way to gain exposure into an industry that you currently don't have exposure into, and perhaps you don't want to pick winners and losers within that industry, but just want a portion of your portfolio to cover the cybersecurity space. Now, this is an ETF that would do just that. As you see, its top 10 holdings include Cisco, Palo Alto, Broadcom, companies like Fortinet, even Splunk, and of course Zscaler. And so the companies we looked at generally make up the top 10 holdings within this ETF, and you don't open yourself up to the risk of one company significantly outperforming or underperforming the others within this sector. You can even see the top 10 holdings are roughly equal weight in this ETF, as you see the top four make up roughly 24 to 25% of this ETF, all being in that 6.5 to 6% allocation. And so certainly an ETF like this First Trust Cybersecurity ETF would be a way to play the cybersecurity space and gain exposure to it. That was a look at four companies in the cybersecurity space. Now, most of them are trading more expensive than I would like, outside of a Fortinet, which is trading roughly in line with my fair value for it. All of these names in the cybersecurity space have rallied throughout the year, and their valuations have become a bit too stretched, in my opinion, especially companies like Zscaler, Crowdstrike, and Palo Alto Networks. Certainly, I would be more interested in them if they were to come down in their price to sales, and overall valuations would come more in line with their fundamentals. That was the cybersecurity industry roundup. Let me know what other industries you would like me to cover. As always, thanks so much for listening, and I'll see you guys in the next video.